And I think from the communication that we've heard from the Fed, whether we go back to the FOMC statement, press conference, the dots, all the way through all of the Fed speakers that we've been hearing in recent days, the message is still very much that they are comfortable with a continued gradual pace of removing accommodation or of raising interest rates. I think that, as you said, we've got very strong economic growth. I think everybody continues to even be surprised by the vigor of the U.S. economy. Even with our high expectations, this morning's numbers continued to exceed it. But the good news is inflation is in check and inflation expectations remain in check. And that allows the Fed to continue to move gradually. It allows them to not worry that they're falling behind the curve. They don't have to react to the strong growth numbers because the inflation threat appears to be relatively limited.
Investors, Bricklin, may be thinking that inflation may pose a bigger threat than what it seems, at least in the headline numbers. And we've seen gold move higher. All of a sudden, it has a life. Just in recent sessions, maybe a concern about inflation is starting to creep into the markets. We've had Amazon raise minimum wages to $15 an hour. We had Pepsi raising prices. I mean, are we getting these small indications from corporate America, at least, that perhaps inflation is going to come and could come a little faster than maybe what a lot of the Fed members think?
Well, you know, there's a bit of a battle there, which is, you know, the Fed is telling you that the economy is doing extraordinary. And now, you know, we're seeing certain signs, you know, whether it be Amazon or other effects, hinting that inflation could be a bit higher. But, you know, I'm just not sure that the momentum is quite there right now. We'll see if, you know, this kind of wage pressure or things like that start to feed into the real economy. Most of us economists that have predicted this in the past have been very wrong that we've seen that kind of pressure. So we're a bit skeptical to put it in our forecast for now.
You know, it's funny because economists are either right until they're wrong or wrong until they're right, right? And eventually,
tough life to live.
Yeah, right? Yeah. So Michelle, I mean, but at some point, one would figure inflation will come. Oil is moving higher. Some people think it's going to 100. Some of these trade disruptions are going to start to trickle through. Practically everybody says that the price of a new car is going to go up, and maybe not just by a few $100s as a result of some of the trade actions. And then, you know, you will have inflation, and that could kneecap the market.
Well, I think there's a couple of things here. You're right, we're watching energy, and that could boost headline inflation, although, of course, the Fed is looking more at the underlying inflation trends because energy goes up and it comes down, and it can move the inflation numbers around. You're absolutely right that tariffs and the trade escalation or the trade war, the potential for that, could certainly pose some inflation risk, although what we've seen to date, I don't think is going to be enough to noticeably impact the inflation numbers, but that remains a risk. I will say more broadly, this is a theme that I've been harping on. I think we hear hints of it from Fed Chairman Powell. It's really important to recognize that the expansion that we're seeing, the growth that we're seeing now is being driven from an expansion in the supply side of the economy, business investment, business hiring. It's that side, that's what's driving growth as opposed to, you know, consumer demand. I mean, we're getting strong consumer demand, but it's being met by more output and more supply, which means the inflationary impact is much reduced. Even in the face of faster wage growth, companies, if you get the productivity that should follow in this story, companies don't need to pass those costs on through. So you get faster growth, but the environment itself is less inflation prone.